Yo, what's up, guys? It's your boy Looney. Today, the market gave us another confusing, choppy, and directionless day. Stocks were kind of all over the place. Crypto stayed under pressure. We still have volatility at elevated levels, and we're showing extreme fear in the market. So in this video, I'm going to break down what actually happened in the market today and go over an early assignment that I went through on CoreWeave or a leveraged CoreWeave position and what's going on with Open, another one of my positions, and why the price action has been a bit weird recently and kind of how I'm positioning in this environment. Before we get into it, quick shout out to the Discord. It is free to join. And I have premium version that is $8 a month, and you get access to coaching, call outs. I have an option selling course. I do giveaways and more. You can check it out. Everything is in the description. So let's get into this. So today has looked pretty similar to what we've been dealing with these past few weeks, past few days. Stocks opened pretty weak. They recovered. And then we had the mid-diers step in for a bit, and then the selling pressure came right back. Crypto, kind of similar boat. There's a lot of heavy selling pressure and downward direction with crypto, Bitcoin, and pretty much this entire space. We also had the VIX. The VIX stayed elevated. It did have a drop today, but I would still say 23 is slightly above average of where the VIX is showing. We also had the fear and greed index showing that we're in extreme fear. And that's not, you can't look through that on Robinhood, but there's other resources to look that up. I believe CNN, you can find the fear and greed index, and we're sitting at extreme fear. And usually that's a good time to be invested into the market. But it doesn't show, that's not going to be perfect. That might not be true, but it is worth noting. Things are not really looking too bullish. We're not really seeing bearish too much. We are slightly seeing more bearish, and it's just a little bit confusing of where everything is going. Every bounce is kind of getting sold. Every dip feels like it's about to break lower. So this is exactly the type of environment where investors or people that are fully invested are getting frustrated. But for myself that has cash on the sidelines and sell options, these have been good opportunities for myself, and this volatility has helped me take advantage of what's going on. So let's talk about the CoreWeave position, because I got assigned early on a leveraged ETF, a long leverage ETF on CoreWeave, and it was because it was super in the money, and therefore the person on the other side, the buyer of the put, decided to exercise before expiration, and therefore I got assigned early, and now these turn into shares. But that's actually a good thing, because now I was able to turn it around and sell a covered call earlier than I would have, because I would have to wait till the next Monday or next week to sell this covered call. But instead, I had the opportunity to do it today. And we could see that I sold a $8 covered call, if I could just pull it up. So I'm selling it at the $8 covered call or strike price, and that is above my cost basis. So if CoreWeave does jump to there, I will be forced to sell the shares for a profit. And if it doesn't, I'll collect that premium or realize that gain as of the premium. And actually what I ended up doing is I took some of that premium, that $20 that I got from it, and I bought one more share. So if we do see massive upside, then I won't miss out on the opportunity gain, or I'll have a little bit skin in the game for if it goes past my break even. And on the other side, I lowered my cost basis by buying one share today. I dropped it pretty significant. I think it was at like $7.6 was my cost basis, and now it dropped to 7.5. And additionally, I do have another cash secured put to lower my cost basis even more, and then I could sell even more covered calls and maybe do the same strategy, maybe change it up a little bit. But let's switch to Open, because Open had a pretty good day today. It jumped up around 9% or 8%. I have a bunch of shares. I know they did a reverse split, so the options were a bit weird, and pretty much all the options expired worthless, I believe. Mine did at least, so I closed it, and I ended up opening up a new trade. And another interesting thing that I don't know too much of, I'm going to do a little bit more research on the way it works, but I received warrants, and I think other people received warrants as well. on Open. So I'm going to my stocks and ETFs, and we can see that I have 6 shares of OpenZ, L, and W. And these are all warrants. I think the way it works is you can exercise these into stocks, and the team or the Open company is basically saying that they believe that Open is going to trade a lot higher than what it is right now. I was trying to figure out the prices, but I think Z, W, and L all have different strike prices, and you can decide to exercise them. And I think the lowest one was $9. So they're expecting for Open to be above $9. So again, I'm not too sure how it works, but it is something that I did notice and a lot of people were bringing up. But we'll see. Maybe I'll do more research and kind of give you guys a better answer on what actually happens with that. I also got assigned on another leverage ETF, and this one was HIMZ, HIMZ, and this is another long. This one I got assigned at a better strike price. I got assigned today on Friday, and I got it at the $8, and then it's factoring in my premium, so it's a little bit lower. It's like 7.6, I believe, was my break even, and now I could sell a covered call, and this one's a lot better situation, so I could be a little bit more aggressive with the strike prices or higher delta with the strike prices and collect even more premium because these are leveraged and therefore more volatile. And HIMZ itself is a pretty volatile stock as is, so adding that leverage even amplifies it a little bit more. But what am I doing? Because I have a lot of things going on. I have a lot of cash cleared puts. I have a lot of cash that is ready to deploy. I have around $9,000 in cash, but my options are $12,000, and that's because I have margin of enabled. I haven't used the margin yet, but if we do see a massive crash, I will probably have to use that margin and use up all my cash. But all my cash is in these cash cleared puts on Mara, on Webull, and I believe that's really an Archer. I have one, and Oscar. I have another one, another CoreWeave, more Mara. I also bought a Leap Call on Mara. I had that in my other video. I'm going to sell covered calls against that and do a 4-man's covered call. But you can see, because volatility is high, I wouldn't say right now is super high, but it is elevated levels. We did come down a little bit. The premiums are better, and I get to own shares. I get to own shares of certain names at lower prices and get paid to do it. So I think that's a good trade-off. Then I'm selling covered calls on assignments. I am waiting for green days. Like today was a good day. For example, I sold a covered call on Open, and a day like today is a good day to do it because it did shoot up around 8%. And that's a significant jump. Yes, I usually wait, or it's better to wait when it's like showing overbought and that kind of situation. But I thought might as well just collect some premium, perhaps reuse it and buy shares or do whatever with that premium. So I am doing that with covered calls. I'm also DCAing. I'm continuing my DCA into crypto. I was looking at the fear and greed index for crypto, and that one was also sitting pretty low at the 11 mark. And also I was looking at the rainbow chart. It's showing at the hold level or right around there. Now, these aren't sure indicators, and I wouldn't just go on about using just this. There's more to it, but it is worth noting that that is what I was looking at, and that's what it's showing. So I'm continuing my dollar cost averaging into crypto because I think sentiment is a bit over, the fear is a little elevated. And also this was long-term, so DCA won't get affected, or dollar cost averaging is a long-term strategy. I'm keeping my position sizing small and strategic. I'm not going all in on these trades. I am doing pretty significant amount of trades, but I'm doing it strategically. So Mara, for example, if we pull it up, I have 5,500 in this trade, but all my strike prices are different. I'm lowering that cost basis every so much at $1 at a time and lowering my average cost if I get assigned and selling covered calls, and I'm able to sell covered calls at lower strike prices because my average cost is also lower. So yes, I am doing a lot of trades, but my position sizing is small in the sense that each trade is not taking up my entire portfolio, and I'm being strategic with it. I'm also letting volatility work for me because these sort of environments, these elevated volatility is tough for traders, but it is ideal for premium option sellers. So yeah, today gave us another day of choppy trading, weak crypto, shaky stocks, elevated volatility, and just overall confusion. So instead of panicking, this is where long-term conviction and option income strategies shine. Let me know in the comments. Did you get assigned anything today? Did you make any moves, or are you just staying patient? Until next time, peace.